We asked AI, what happens if a global trade war escalates? Trade tensions are escalating worldwide. The United States has imposed significant tariffs on imports from Canada, Mexico, and China, leading these nations to implement retaliatory measures. This escalating trade war threatens global supply chains and could have profound economic consequences. HKLaw.com. What happens if this trade war continues to escalate? We asked AI to analyze the latest economic data, historical trade conflicts, and policy trends to predict how a global trade war could reshape the economy. Here's what you need to know. 1. What is a trade war and why do they happen? A trade war occurs when countries impose tariffs, sanctions, or other trade barriers against one another, often in retaliation. AI identified 3 major reasons why trade wars escalate. Economic protectionism. Governments impose tariffs to protect local industries from foreign competition. Geopolitical tensions. Trade policies are used as leverage in international disputes. Control over strategic resources. Nations restrict exports of valuable resources such as oil, semiconductors, and rare earth metals. Historically, trade wars have led to recessions, inflation, and shifts in global power dynamics. Could this time be different? 2. The current trade war landscape. We asked AI, what are the biggest trade conflicts happening right now? Here's what it found. US versus Canada. On March 4, 2025, the US imposed 25% tariffs on Canadian exports and 10% tariffs on Canadian energy products. In response, Canada implemented a 25% surtax on certain US goods. US versus Mexico. The US imposed 25% tariffs on Mexican goods effective March 4, 2025. Mexican President Claudia Sheinbaum announced plans for retaliatory tariffs to be detailed on March 9. US versus China. The US increased tariffs on Chinese imports from 10% to 20% starting March 4, 2025. China has indicated plans for retaliatory measures against certain US products, effective March 10. With tensions rising across multiple regions, AI predicts we may be entering one of the most complex trade wars in modern history. 3. What happens if a global trade war escalates? AI's predictions. We asked AI to analyze historical trade wars and global economic trends to predict the most likely outcomes of a full-scale trade conflict. Scenario 1. Higher prices and inflation worldwide, most likely. Tariffs increase production costs, making goods more expensive for consumers. AI predicts that inflation could rise by an additional 5 to 10% globally if tariffs remain high. The most affected sectors include electronics, automobiles, and food imports. Scenario 2. Supply chain disruptions and product shortages, high-risk scenario. Countries restrict exports of key materials like semiconductors, steel, and oil. AI predicts that industries such as automotive manufacturing, consumer electronics, and energy production could face severe shortages. Shipping delays and higher logistics costs will further complicate supply chains. Scenario 3. Economic recession and job losses, moderate to high risk. Businesses dependent on global trade will see declining profits and workforce reductions. AI warns that millions of jobs in retail, manufacturing, and logistics could be at risk. Consumer spending would decline as people adjust to higher prices. Scenario 4. Shifting global trade alliances, long-term consequence. AI predicts that Canada, Mexico, and other trading partners may strengthen economic ties with alternative markets. The US dollar's dominance in global trade could weaken as countries explore alternative currencies and trade agreements. China, Russia, and other nations may use this opportunity to create competing trade networks. Trade wars have rarely benefited all parties involved. AI warns that unless policies change, we could be entering a prolonged period of economic uncertainty. 4. How can businesses and consumers prepare? AI recommends several strategies to navigate an escalating trade war. Diversify suppliers and manufacturing partners. Companies should explore supply chains in countries that are less affected by tariffs, such as Vietnam, Brazil, and India. Invest in domestic and regional manufacturing. Industries focused on local production and nearshoring will likely outperform those reliant on overseas imports. Monitor currency and stock market volatility. AI suggests that investors focus on commodities, inflation-resistant assets, and companies that control essential resources. Stay informed on policy changes and trade agreements. Governments may introduce new trade deals or exemptions to stabilize markets. Businesses should stay informed. For those who adapt early, there will be opportunities amid the challenges of a shifting trade landscape. What do you think? Will this trade war continue escalating, or will governments negotiate new trade deals before it's too late? Drop your thoughts in the comments, and let's discuss. If you found this breakdown valuable, don't forget to like, subscribe, and stay tuned for more AI-driven insights.